Hello, and welcome to the Konvergent Video Series for the week of May 11th. I want to start by wishing a belated Happy Mother's Day to all the moms out there. So with that, let's jump into the data. This week, there's actually not a lot of data that's going to be released until the very end of the week, so we're going to really focus on what we saw last week. And the first one is the markets actually had a really good week last week with the S&P 500 up about 3.6% for the week. And that came in spite of some really bad data that we saw at the end of the week, where the market really did the best and had kind of the spike into the end of the week. So first, on new unemployment claims that we saw last Thursday, we saw over 3 million new claims for unemployment, bringing the total to well over 30 million over the last 7 weeks. We also got the April monthly numbers released, and we saw a drop in over 20 million in payrolls for the month of April, which spiked the unemployment rate to close to 15%. So numbers that are just really unprecedented, and especially in such a short amount of time to see those types of numbers. And this last chart that's related to all of that, which is troubling to me, is that only around 50% of all working age adults are currently working in jobs right now. So a lot of bad data around unemployment, which obviously is concerning for me in terms of how quickly we can really get this economy going again. So related to all this is a topic that I spoke to a little bit last week, which is the difference between insolvency and liquidity. So the Fed and the Treasury have done a great job of pumping a lot of money into the system from a liquidity standpoint. So small businesses have had access to SBA loans, individuals have had direct payments, as well as an increase in unemployment insurance if they did get unemployed. So that's been nice from a liquidity standpoint. What it doesn't do is bring any long-term revenue or long-term income to businesses or individuals. And that's the solvency concern that we have, as we've seen the levels of defaults start to pick up in the last number of weeks and months, whether it's businesses defaulting on credit or individuals not paying rents, not paying credit card debts and mortgages. And so that's a big concern of ours, and as the chart that you're looking at now, also we're seeing a large spike in the amount of junk ratings on corporate debt. Moving away from their bonds being rated as investment grade to junk. And so it's just another concern that the market is having right now in terms of the long-term solvency of corporate America. So in spite of all that, though, in spite of all these concerning data points, the markets were up last week, and it's really on the hopes that the economy is going to bounce back in a very big way very quickly as different states open their economies back up. There's this term that we're hearing right now of pent-up demand, and that everyone's just going to go back to what we were doing before the coronavirus broke out. I'm not seeing widespread data of that, and the people I'm talking to here locally, as well as the data and the charts that we're seeing, we're still seeing a lot of concern about how quickly this is going to get going again. And one of those is the survey that you're looking at now, which asks individuals, how likely in the next 6 months are you going to book a hotel stay and travel? And the numbers have remained consistently low and even have gotten worse if you look at the 5-week average, which is on the right. We've actually seen a drop in that number. Where on the left, you're seeing the most recent week, and still less than 20% of those surveyed are highly likely or likely to book a hotel stay in the next 6 months. So the concerning part of that is the numbers have actually gotten a little bit worse, as I mentioned earlier. And I think that's some concern that people are still having, that even though these economies are opening back up, there is some concern that maybe the virus might come back, and what might happen in 6 months with additional shutdowns or just the health concerns related to that, which leads us to still have our same position that we've had for the last number of weeks, which is caution. And so we're waiting for more data. We want to see more data that shows that we really are seeing a massive pickup in demand before we really feel like this economy is going to get back to where it was. So that's really the data for the week. With that, I hope you all caught our latest blog post that we just put out over the weekend, and we'll repost again this week, which is 4 steps business owners can take to weather the coronavirus storm. And so you'll see that in the newsletter again coming out shortly. And with that, I hope you all have a great week, and we'll look forward to talking with you all soon. If you have any questions, never hesitate to reach out to the team here at Konvergent Wealth Partners. Thank you.